right, good morning, folks. This is your free video from seasonalswingtrader.com. This morning we're going to take a look at wheat. We're focusing on the July contract, July wheat ZWN7. This morning we're trading down about 4 cents or so here at 437 3/4. Last Friday we had the planning intention reports, which were mildly bearish. However, the bearish news was already pretty much priced in. You can see the spike down here at these lows of 430 before we quickly rebounded and closed higher. This is somewhat of a bullish candle here. We didn't really close at the top of the range. We closed more so in the middle of the range. But you can see, though, that due to relatively muted price action other than this lower drift downwards, it was a nice bar to see for the bulls. Now, going forward, you can see back here that we've been trading, range bound in a narrow fashion for several months. We finally got a crack to the upside here in mid-February before rejecting at the 382. We're looking to possibly put in a new bottom down here, but if we do not take out these lows here and we do break this trend line, I think that a longer-term low may be in place with net specs holding a very large short position. And us going into the summer months and the summer planting season, there are some possible potential weather scares in the horizon. So I think we could look at some low-risk call spreads. If we pull up a chain here on the July options, you can see I'm looking at the July option chain, expiration of 6/24, approximately 80 days left or so. Looking at the 450, the 440, 450 strikes and selling the $500 level. I'm selling the 500 because that is a 50% retracement. So you can see here, if we buy the 450s, sell the 500s at current market conditions, we're paying about 9 3/4 cents. Let's call it 10 cents. So 10 cents or $500. Total cost is $500 on the trade. That's our max risk, a profit potential of a little over $2,000. We would look as a profit objective at 500. We realize our max reward at the 50% retracement level or a close above 500 at expiration. Our risk, in all honesty, could be 500. We could be willing to almost risk the entire premium paid here, $500 or so on this trade. Pretty low risk for a good chance here to reach the 50% retracement level. Okay, risk on the trade. Again, the max risk is $500 for the spread. If you didn't do anything, you sat back and wheat fell off a cliff here, your max risk on the trade is $500. However, what we would be looking to do is probably risking half or 2/3 of the premium paid. So if wheat did roll over here and traded lower and our premium on the spread went from $500 to $250, we would risk $250 and consider exiting. Otherwise, you could look to just hold and risk the entire amount, or if we start breaking down below this support, that might be a sign to exit, and we would look for a bottom formation to start legging back in for higher prices. So that's our tip of the day, and hope to see you soon. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.